right, we are getting started here with our webinar, How to Develop a Profitable Trading Strategy, Part 2. My name is Markus Heitkoetter. I'm the CEO of Rockwell Trading, and I want to welcome you this morning to our series, Profitable Day Trading. Okay, hold on. There's just the moderator telling me something very quickly, and this might only be that we might have to change something just to make sure that we get a perfect recording here. Because this is what we are trying to do here this morning. We will record this webinar, so moderator, just let me know if everything is okay and if we can get started here. And as soon as we get the green light, everything is okay, perfectly. So we are recording the screen. In a minute, we'll switch to charts because as you know, what we are covering here is a series, the Profitable Day Trader series. And last month, I'm here every first Tuesday in a month. So last time, what we covered is how to develop a profitable trading strategy. And we talked in detail about the 7 steps, how to develop a profitable trading strategy. So we talked about it, that we want to start with an idea, selecting a market, selecting a time frame, define entry rules, define exit rules, evaluate your system, and improve the system. And what I promised you last time is that today we will actually use the charts, we will look at some software, and we will actually develop a profitable trading system. So we will not repeat all the 7 steps here in detail. And in case you missed one of these steps, the last session was recorded the same as today's session here. So you can review the recording on fxstreet.com. And later on, the moderator will post the link where you will find the recordings. Today's recording will be available in a couple of days here, and we'll also inform you by email as soon as the recording is available. All right. So let me bring up the charting software, and I'll switch in between these 7 steps and the charting software so that you know exactly at what step we are. And we want to start with an idea, and this is what we're going to do here. Start with an idea, and those of you who have attended previous webinars know that I'm a big fan of Bollinger Band. Those of you who have attended previous webinars know that Bollinger Band can be used as a trend following and a trend fading system. The idea that we want to use today is to use the Bollinger Band as a trend fading system. All right, let me do the following. Let me bring up the charting software here. And I quickly have to switch the camera here. So bear with me for a second. Here we go. And it might be a second or two. And you should be able to see, here we go. Is this the right charting template? Yes, you should be able to see the charts. What you see here right now is the euro currency versus the US dollar. And let me just hook up to the live data here. We might have to turn the live data off in a few seconds because sometimes it gives a delay in the room here. So in terms of what you see here, but I thought it would be neat to see the live data. All right. Also, what you see is that I'm turning 60-minute bars on. So the idea that we want to use, again, is Bollinger Band as a trend fading system. So let me add the Bollinger Band here as a study to my screen. And for those of you who are not familiar with the Bollinger Bands, let me quickly show it to you. You see, Bollinger Bands consist of a center line, which is a moving average, and the standard setting for this here in my charting software is 18. So 18 bars used for a moving average, and other charting software might use 20. It doesn't matter. We just want to get started somewhere, and then, of course, we will improve the trading strategy as we go along. Remember the 6th step, improving the strategy. So anyhow, the Bollinger Bands also have an upper Bollinger Band and a lower Bollinger Band, and these are standard deviations of the moving average. And by default, any software is using 2 standard deviations. So the quick idea here is that after Bollinger Bands move outside of the bars, like for example here, as soon as prices move outside of the Bollinger Band, they should move back inside of the Bollinger Bands fairly quickly. So you see it happens, for example, here, it happens here, it happens here. See where Bollinger Band, where the prices quickly move outside of the lower Bollinger Band, same on the upper Bollinger Band, and then move back to the inside. You see it happens here, and they're quickly moving back inside the Bollinger Bands before they then continue to be outside of the band. And so the idea is, can we use this as a trend fading approach? And we talked about the differences between trend following and trend fading in our last session here. So can we use this for a quick opportunity to make some money? So this is the general idea. All right. So second is we want to select the market. Well, since we're here on fxtrade.com, I assume that most of you are somewhat interested in trading the Forex market. Therefore, as an initial market, I've selected the euro versus the dollar, which is one of the most popular currency pairs in Forex trading. Later on, we will extend this strategy to other markets because this is very important as a test for a solid trading strategy to test it on multiple markets. Time frame, well, as I said, initially we want to use 60-minute bars here, and we talked about advantages and disadvantages of various time frames, whether you should use 5 minutes or 10 minutes or 60 minutes in the previous session, and I don't want to get into a lot of detail here because, again, the main purpose of today's session is to apply what you have learned in the last session. So initially we want to start off with 60-minute bars here. All right, so we define our entry signals here, and let me quickly bring up my toolbox. Let me do this and define the strategy here. And this is the example that I have. Let me just bring it back into the screen. See, I'm using a larger screen, but because of the recording, we have to scale back here on the screen. So this is why sometimes you see me moving windows back into the screen here. All right. You see, every charting software is different. I'm using Genesis Financial Trade Navigator here, but you can use TradeStation eSignal, or you can do this manually. The reason why today I'm using I'm programming the strategy is because we want to get a performance report and we want to evaluate the results and see how the results vary if we vary some parameters and if we actually apply this trading strategy on these markets. So you see the very simple entry rules that we are using here is we want to buy at the lower Bollinger Band, and I'm using two parameters here. So I want to be able later on to vary the bars, number of bars that are used in the moving average, and I want to vary the standard deviation here. And there's a question, if there's something special why you use an 18-period Bollinger Band and moving average. No, there's nothing. We got to start somewhere. I mean, we will later on vary these parameters to find the best setting. And it might be 18, it might be 20, it might be another value that at this point we don't know yet, but we have to start somewhere, right? And it's always good to start with the standards. And the standard, according to John Bollinger, is anywhere between 18 and 21. Most charting packages use 18 or 21. Some charting packages use 20. So no, I mean, at this point, I'm just using the standard here, and then we want to see if we get better results if we deviate from the standard. Okay, the same with the short entry. We want to enter at the upper Bollinger Band with the limit, and again, I'm using these parameters because we want to test, as Din asked here, why do we use 18? Is it maybe a better setting to use 20 or 16 or 17, whatever it might be? Now, I also define at this point only profit targets, okay? No stop losses yet. So you see the stop losses are ticked off, and because you know that the fourth step here is define exit signals, and then we go move on to the exit signals. So first entry signals, then exit signals. So bear with me, we will talk about stop losses here. So at this point, the reason why I'm using here a profit target is just so that we get an exit. And again, at this point, I'm using here a target amount, a variable, and I'm setting it at only $100, 10 pips, because we have to get started somewhere and then see where it is best. All right. So I'm backtesting this on the past year and see how many trades we get. And you know, we have been talking about it in the last webinar. In order to get statistically relevant results, you need to have at least 40 trades. So you want to have at least 40 trades. The more, the better. you want to shoot for around 200 trades. So let me do this. Let me just quickly run it with the standard settings and then see how we can improve this trading strategy and see if we get some decent results here. You see it's doing the back testing here live while we are talking, and this is what I promised you last time. So it seems that it's testing it on several trades. I do not know why the optimizer is coming up here. This is not what I intended to do. So let me close this and let me make sure that I'm shutting down the optimizer and that I'm using here just some standards. Oh, I just see that bars in average I use 10. We wanted to use 18, right? This is what we said. Okay. So let's get started here. Let me save this strategy. And you see, whenever it takes a little bit, this means that obviously I'm above the 40 trades that I'm looking for. So it shouldn't take longer than maybe 10 or 12 seconds here. And here we go. Here are the initial results. This is the performance report. It was tested. This strategy here was right now tested over 647 trades. Again, what I was looking for is actually a minimum of 40 trades. 200 trades would be good. Well, here, perfect. We got 647 trades. The total net profit over these 647 trades is $15,000, which results in an average trade of $24. We talked about some key performance indicators that we want to look at, and one of them is, of course, the total net profit, the total number of trades, and the average profit per trade. We have a profit factor of 1.35 and a winning percentage of a whopping 91.8%. Well, this is not unusual. We talked about this in the last webinar, and you know that if you're using a trend fading approach, the average profit per trade is rather small, but therefore you have a high winning percentage. If you're using a trend following approach, you might see that the winning percentage goes down, but the average profit per trade goes up. So let's take a look at the average win and the average loss. And here we have two important things to notice. The average win is $100. No surprise there, because initially we set our profit target at $100. So as soon as we see $100, we're taking money off the table. But take a look at the average loss. The average loss, $831. What does this mean? You see that also the largest loss, $3,250. Well, this is one of the side effects of not using a stop loss at all. Throughout the trade, you can have a substantial drawdown here, and this is what you also see. Look at the drawdown, a drawdown of $4,000, more than $4,000 on a $15,000 profit that we achieved here. So obviously there is some room for improvement, but let's take a look at the equity curve. And I do not want to see the moving average here. This is not a concept that we want to discuss today. So let me just see how I can get rid of this. There must be a setting here. Show sense, show max intra. I thought that there was a setting here how to get rid of the moving average. I don't see it here immediately. So we're looking at the red line here. The red line is actually, as you can see, the unfiltered equity. I see it still has quite large swings in between. So we have a couple of small gains, as it seems, and then a larger loss sets us back. However, overall, the trading strategy with the standard settings is already profitable. So it's a good start. Remember, we just get started, and we want to see if we can improve the trading strategy based on the idea. And also, if you remember what we talked about last time, where we said, well, we first want to go through the idea, then the market, then the time frame, then the entry sequence. So we want to go through the 7 steps that you have seen. And when starting to improve the strategy, we actually want to go backwards. We first want to improve the exits, then we want to improve the entries, then we might want to switch to a different time frame, then we might apply it to a different market. And if all this does not give us satisfactory results, in this case, we will then abandon the trading idea and start with a new trading idea. But here overall, the trading idea seems to be pretty solid. So let's go back and let's see what we can do here. But first, before we do anything, let me just display this strategy on the chart so that you know exactly what we are talking about. So let me apply the trading strategy to the chart. And you see, we said that we always wanted to enter as soon as prices go to the Bollinger Band. See it here, and we're using an 18. Let me maybe enhance this a little bit. And if prices are retracing, then very quickly we're taking our profits. So let me enhance the chart, enlarge the chart a little bit, that you see a little bit better what exactly we are doing. Okay? So as soon as prices are going towards the lower Bollinger Band, then we want to buy on a limit order, and we want to get out, and this is the red triangle here, as soon as we see $100 in profits. And here, actually, on the previous trade, you also see one of the problems with the strategy. See that we are going long here, and I hope that you see this on that you see my mouse moving and my cursor moving. We see that for quite a while the trade goes against you. So this really takes a good stomach, okay, to see how the trade goes against you. But then prices are moving back inside the Bollinger Band, and we are getting filled here on our $100 profit. But I mean, you get the idea what we are trying to do here, right? So I just want to make sure that we all have the idea here. And if you have any questions, please type them in the chat here. And if it fits, I'll answer them in between. Otherwise, we have a couple of minutes at the end where we can answer questions. So let me do the following now as a first. Let me try to change the bars used in average, because again, first talking about entry rules, and we were using 18, and this was Din's question, and Boyski is asking, why not using candles here? Well, doesn't really matter, right? Because we are not using the bars or the candles here. So if you guys like candles better, let me bring up candles. Does it help you? I mean, here on this chart right now, it gets a little bit more difficult to read where we want to enter and where we want to exit. So then let me switch back to bars, okay? So you enter as soon as prices, Humrai, as soon as prices are moving outside the Bollinger Band. So as soon as prices are at the Bollinger Band, I'm buying here on limit. Okay, well, let me go back, and as you know, I defined everything here as variables. So let me do the following. Let me use a different setting here instead of 18 for the Bollinger Bands. Okay? So let me see if we can get any better results. We want to test parameters between, what do we want to do? Let's see, 6 and 22. And just to make this a little bit faster here, I go in steps of 2. So I'm testing a parameter of 6, 8, 10, 12, 13, and so on. So let me do this, and let me run the optimizer here, and let's take a look at some key performance figures and see how they change, and let's see if this actually helps our performance here. And you see right now what the computer does is it is displaying the test number. So at first we are testing it with a moving average of 6, then 8, then 10, then 12. And you see the different variables here. You see the different key performance indicators. Winning percentage, it's somewhere between 87 and 98%. And as you can see, the winning percentage gets higher as we increase the number of bars used in average here. Of course, the higher the moving average, the fewer trades we have. But we are all well above our 200 trades. Perfect. Let's take a look at the net profit here. And if we are sorting it by net profit, you see that a smaller setting gives us a very high net profit, but a small average per trade. It's just because we're doing a lot of trades here. So a setting of 6, 8, let me actually display it visually. So I want to display visually, and this is a very handy function that we are using here. Not the winning percentage, but I want to see the net profit. So let me bring this up here. And you see a small setting of 6 and 8 is giving us a very nice profit, but we don't always want to go for the setting with the highest net profit for the following reason. See, a solid trading system, you can vary the settings and you achieve similar results. So you see, if you have a setting here of 14, 16, 18, or 20, you get very similar results. You get results between profits between $12,000 and maybe $16,000. However, here you have high profits on the small settings, and then you have this huge drop down. Okay, huge drop down. Therefore, we might decide for now to stick with a setting of 18. This now depends a little bit on you. You have seen here that you are getting more trades if you use a lower setting of 6 and 8. So if you're looking for trading action, you might actually use a setting of 6 or 8. Actually, you know what? Why don't we test a setting of 2 for the moving average? Anywhere between 2 and 10. How about that? Let me just quickly do this. And let's see what happens if we use a very small setting for the moving average between 2 and 10. And here we can actually go in one steps and see what is going on there. Humrai is asking while we are waiting for the back testing here. I'm trading the regular Forex, so we're talking about 10 pips here. Okay, Humrai? We're talking about 10 pips. So let's see what happens if we use a setting of anywhere between 2 and 10 for the moving average instead of the standard settings of 18 and 20. And no surprise that it does well here, because we talked about this again in previous webinars. According to John Bollinger, if you are trading on smaller time frames than daily charts, you should actually decrease the number of bars used in moving average. So the general statement of John Bollinger is proven here, actually, where we see, whoa, look at this. We can actually increase our net profit from $15,000 to up to $40,000 if we are using a very small setting for the moving average. What will happen here is that the average profit per trade goes down, but we are having way more trades in the selected time frame, and therefore, since the net profit is number of trades times average profit, we achieve a very high net profit. Let me bring this up on a chart. See the total net profit, the smaller the setting, the higher the net profit. So what do you think? Let's pick something here in between, and let's maybe use a setting of 3, so that if the system deviates by one bar here, it doesn't really matter. We should have a solid trading system here. Okay, let's use a setting of 3. This is what I will do. Use as values. Now also, according to John Bollinger, if you lower the bars averaged, if you lower the bars used in average, you might want to change the standard deviation. And John Bollinger actually suggests that you increase the standard deviation. However, so let's see if we use a standard deviation of anywhere between 1 and 3, and we want to go in steps of 0.5. So just to make it quickly, for the number of bars used in average, 3 for the Bollinger Bands, and instead of a standard deviation of 2, want to see what happens if we take 1, 1.5, 2, 2.5, or 3. If actually what John Bollinger says is true, where he suggests if you lower the bars used in moving average, that you should actually increase the standard deviation here. So let's see. Actually, it seems that according to our testing here, it doesn't really matter. You see, the winning percentage is almost the same. The net profit actually is highest when we use a very small value for the standard deviation here. But on the other hand, the average profit per trade is highest if we are using a large number of the standard deviations. I personally, if I see something like this, and if I see on the chart the net profit around here, I would probably stick with 2. I mean, don't be greedy, okay? You can use 1. And this is where I actually strongly encourage you to do your own testing here, okay? So please do your own testing. Do not do what we do, what we do today as granted and say, oh, okay, now I'm going to trade the strategy and I'm making $50,000 in a year here. No, I'm using an example here, okay? Using an example, do your own backtesting. Do not, warning, do not trade the strategy before you have tested it yourself because there are some pitfalls. We'll talk about this here in a minute. Okay, let's use two. We said that we want to use two. Why not? Okay, going for $44,000. I don't think that this is bad. Okay, let's see. Let's run the strategy here with the new settings. The bars use an average of 3 and the standard deviation of 2. And let me quickly see. All right, so here we have the values. As you can see, the profit factor increased, the winning percentage decreased from 91 to 82%. The drawdown is around the same, but now since we have a higher net profit, the drawdown actually is lower in terms of percentage. And what you want to do is, if you look at the average yearly profit, and this is approximately what you can see here, yearly profit of this particular trading strategy per contract, you want to see a drawdown of anywhere between 10 and 15%. And we talked about some good values and ratios here in our previous webinar. So since we have another 20 minutes, I want to move on and not really go here in detail. However, what is also noticeable, the largest loss here decreased from 3,000 and something to 1,850. Still, I mean, an unbelievable win-loss ratio. Basically, for every dollar that we win, we risk what, $185 that we risk. We want to see if we can improve that, right? Okay, let's see. There were some questions in between. Okay, we were talking about candles. I asked Hamri's question. Rama said $100 profit, 100 pip in a mini account. Correct, absolutely, and 10 pip for a standard account. Yes, thanks for clarifying this. Okay. Joe is asking, do these tests include the spread, a spread of 2 pips? I'm assuming a spread of 2 pips here. And Hamre, we talked about this. Yes, we enter. No, we don't enter when the bar closes outside the Bollinger Band. We enter as soon as prices move outside of the Bollinger Bands. Okay. All right. Let's see. What do we want to do? We want to continue our testing. And now, since we might have found a good entry, let's play around with the exit. And let's see if we can improve this ratio. Because honestly, it looks quite decent to have the ratios up here, the winning percentage. So what we certainly want to do is work on the win-loss ratio here. I mean, this is something that hopefully we can improve. All right. So let's go back to the strategy and let's see what happens if we go, or actually, let me do the following first. Let me actually print this visually on the screen so that you know what we are doing here. So let me change the settings for the Bollinger Bands here to what have we actually been using? 3. So instead of 18, we've been using 3 and a standard deviation of 2. So you see, we get a lot of trading action here. And no surprise. Take a look at this. No surprise. When does this strategy work best? Look at the times, at the trading times that we have here. And you see them in the upper left-hand side of the screen. The trading strategy does best. Oops, I forgot to change the moving average here. Let me quickly do this. Moving average of 3. Oops. 3. The trading strategy performs best during the quiet times, when the Forex is not moving, when the currencies are not moving. When is this? Well, for us in the US, it is the afternoon session and the early morning session. See, then here, this is around 2 a.m. in the morning, around 2 a.m., it starts moving again, and this is when we experience this large drawdown. Oops. So just visually looking at the charts, what might be a good idea for this trading strategy? Could it be a good idea to limit the trading times and say, hey, you know what, since we know that this is a trend fading strategy, we only trade it during the night session when we know that the market is moving sideways, and we stay away in the morning session when we know that the markets are typically moving. Oh, absolutely. This would be very valid and would probably help us, okay? I don't want to program this in right now. I'm just giving you some ideas because you have to start somewhere. And this is what we talked about the last time. I mean, everybody says, oh, developing a trading strategy is so difficult. You should not do this. You should leave it to the experts and pay us thousands of dollars that we give you a trading strategy. No, you can do it yourself if you know what you're doing. And this is why in our last webinar, we talked about the 7 steps here. Okay, so let's see if we can actually improve this already really good trading strategy if we change the target amount, our profit target. And let's see, if we go anywhere between, let's say, $50 and $500. So 5 pips on the regular contract, okay, and 50 pips here. And we go in steps of just initially want to see how this is doing, maybe in steps of 20, okay, so that we don't wait here too long. I don't want to keep you bored. I mean, in real testing, you want to do it pip for pip, but here, just to make sure that we see some action here on the computer and that's not testing it too long. Want to get a rough idea of what variables might be good. And again, I'm sorting it here by net profit. And you see, actually, it seems that if we are lowering our profit target, obviously, no surprise, the winning percentage goes up here, but so does the net profit. And take a look at this. Even the average profit per trade is going up for a value of 70. Just make sure we are not over optimizing it. But as you can see, it seems already right now, the larger the profit target, the smaller the overall net profit because our winning percentage decreases. And we talked about this in the previous webinar that the winning percentage actually is a function of the ratio between the profit target and the stop loss. Okay, so the higher the ratio between profit target and stop loss, the lower the winning percentage here. See, I think we can, I mean, we'll take a look here at the chart for the net profit, but you see that we seem to achieve really good results with rather small profit targets here, anywhere between 50 and 150, doesn't really matter. And then we seem to achieve pretty good results anywhere between 350 and 500. Let me just quickly write this down. So between 50 and 150, because we want to use these results here in a little bit, and 350 and 500. Okay, so you see overall our setting of 100 that we had here is not too bad. And again, I don't like these outliers, so I want to keep it here, maybe at around 100. Don't get greedy. Don't over-optimize your system. You want to make sure that this is a solid, a stable trading system here, also for other currencies, and this is working over some time. Okay, so let's keep it maybe at around 100, and let's see what happens if we add a stop loss. How about that? So let me just pick the 100 here. Where did we have the 100? I don't see it here, so I'm just manually putting it in here. Now, next step is, as you know, we still don't have any stop losses here. So let me enable the stop loss. And initially, we want to use a stop loss that is exactly the same as the profit target. So we use a ratio here of 1 to 1. Just see how the overall system does. How about that? Okay, so let's run it and let's see what a stop of 100 does to our system. And it's a $100 again. And Rama, thanks for clarifying this. 100 would be 100 pips in a mini account and 10 pips for a standard account. Woo! Look at that. Adding a small stop loss would actually decrease our total net profit. It would decrease the average profit per trade. It decreases the profit factor and the winning percentage. Of course, it also decreases here our maximum drawdown. But let's see if we find a good balance. And obviously, right now we have a very good ratio between the largest or the average win here and the average loss. So, but let's see if we can find a good balance between the upper half here of our performance report. So the total net profit, the average profit per trade, the winning percentage, the profit factor, and the drawdown, and the lower bottom here. So let's see what happens if we would use a stop loss amount, and we do the same anywhere between 50 and 500, and I'm optimizing it here in steps of 20. just so that we are not getting bored. Again, for you, I would strongly recommend that you do it for a value of 10, so going in 1 pip steps if you are trading the standard account. Okay, so let's quickly do this and let's see what stop loss values or what range of stop losses would actually produce here some decent results. And as you can see, thus far, it seems that the larger the stop loss, the better the results are getting. Unfortunately, also, you have a problem then with the drawdown. So here you have to make a decision. And this is where, again, I say that every trader is different. I know several traders who are trading without a stop loss, but it's a calculated risk. I always recommend using a stop loss, even if it is a very large, catastrophic stop loss here. Let's see, you see, we were getting up here. The higher the stop loss that we are setting, the higher our net profit and average profit per trade, but it's still not as good as it has been previously. So you have to ask yourself, are you willing to take this calculated risk where you say, well, not placing a stop loss, you know that it might wipe out your trading account, but see that this only happens every, I don't know, every once in 10 years, no idea, or every once in 10,000 trades, but it is a risk, right? But this is what trading is all about, risk and reward. So let's see, again, you see we have the last couple of tests here, and you can already see the larger the stop loss, the larger the net profit, and also the average profit per trade. And I'm not quite sure if you're seeing the average profit per trade, so I might have to move this here a little bit. But you see it here at the end. Let's take a look at the max drawdown. The max drawdown, surprisingly, for this particular strategy is around the same. It's anywhere between 3,000 and 70. Let me see what is the smallest max drawdown. Well, it's here around 2,000, but you see this really doesn't count because an average profit of per trade of $8, $10, or $13 might as well flipping hamburgers at McDonald's here. I mean, we want to look for decent amounts. So we were talking about anywhere between $3,000 and $6,000. Okay, let's just display it on the chart and look at the net profit here. And yeah, no surprise, the higher actually our stop loss, the higher our average profit, our total net profit. Let's take a look at another setting, the average profit per trade. So let's take a look at this because this is something that we want to take into consideration. You see that obviously we're doing better with a rather large stop loss. So a stop loss of anywhere between 350 and 500. So how about that? How about we set the stop at, let's say, 350? Okay, just to use a stop loss. So let me see if I find the stop loss of 350 here. Actually, I don't, so it might be easier if I just type it in here. It's 350. Now, as you remember, we also achieved pretty good results with a target amount here of 350 to 500. So let's see if applying a stop loss, if we should maybe increase also our target amount of 300 to 500. So let's see what this does to our overall results. And again, right now we are striving for a balance of a decent risk-reward ratio and a nice winning percentage, nice average profit per trade. And take a look at this. We can improve our average profit per trade to 28.27 if we are increasing our profit target as well. Take a look at this. Not bad, huh? So let's take a look at the net profit here. So it seems when applying a stop loss, it absolutely makes sense instead of the $100 to use a setting of anywhere, and let's take a look at the chart very quickly, anywhere between 350 and 400 actually. This seems to be a good result. So what about using 370, somewhere in between, or even 390? We could use that, right? Or 400. I don't know. Let's just stick with 350. Because the beautiful thing right now, if we are using 350, is that our stop loss is equal to our target amount here. And this actually means that we have a win-loss ratio of 1 to 1.5. Take a look at this, at the results of the overall strategy here. And I know that we have approximately 5 more minutes, and that is good because we'll use these 5 more minutes to go back and change a little bit our entry signal and see how if this would improve our profit target. Take a look at this. Average win 174, average loss 284. So the largest win and loss, we are pretty good here from the ratios. Our winning percentage is up to 68%. Our profit factor is 1.31. We have an average profit per trade of 28. And again, the total number of trades is well above the 200 that we were shooting for. Very nice. Take a look at the chart and look at this equity curve. Look what we accomplished here in the last 30 minutes. You remember initially when we started and it was very erratic and we had a couple of trades going up and then bang, it was going down and going up. Right now, as you can see, it is as smooth as the blue line, which is the moving average. And isn't this what we are all looking for? A smooth equity curve here without all the surprises. Yeah, you see that at the beginning of the year, we had a drawdown here. Okay. ATSA. Winning percentage is a fib number. Thanks for noticing. Okay. So what does it mean? Is good strategy if it is a fib number? No, coincidence, right? If you're looking for a blue car, you find blue cars everywhere. If you're looking for fibs, you'll find them everywhere, right? So, right. Anyhow, good. Here we are. So pretty nice, pretty nice. Let's see. One more thing that we want to do is right now, after we have defined our exits, we want to see if we can use the bars, use an average, if we can improve this again. You remember that we have been looking for values between 2 and 20. So let's see if with these new target amounts and stop losses here, if we can maybe increase the number of bars, if it makes sense to change the parameter. And remember, what we are looking for is that we achieve similar results with the parameter plus minus 1 or plus minus 10%. Let's see, we're going for the 2 here. And again, we have the number of trades, we have the number of wins, we have the net profit here. And again, it seems that the smaller the number of bars used in moving average here, the better the results. See, we do not have a real improvement if we would use anything else. Let me just scoop it over here to the average trade so that you can see the average trade. And I hope that you can see it here. And you see that the results of 3, 4, and 5 produce very solid results. 3, 4, and 5. So we can stick with 3, or we might even be able to change this to 4. But let's do this. Let's stick with 3. So that's good. So after changing here the stop loss and the profit target, initially the value that we picked for the number of bars used in the Bollinger Bands was confirmed. Okay, let's keep with this. All right, let's see. We have 3 more minutes. So what we should do here is actually try to use the same strategy on related markets. How about this? I mean, right now we found a good trading strategy for a 60-minute bars on the euro versus the dollar. We have some target amounts, we have some stop loss amounts. So right now, let's make sure that we have not curve fitted it to the euro versus the dollar. Let's see if it does equally well in other related markets. And what I'd have to do here is basically just go to a strategy basket and say, we want to use this on the symbol. And as you remember, it was the euro. Oops, euro versus the dollar. So this is our reference pair here. And we want to use the same. Well, what other currencies do you guys trade? The euro versus the British pound? How about that? GBP, is that okay? Euro versus British pound? What other market do you want to see it on? Let's do the yen. What is it? JPY versus the US dollar? Let me see. Probably have to specify the US dollar versus the Japanese yen. Here we go. Okay. Let's keep it at this. I mean, we want to use some currency pairs that are very popular. Okay, so pound versus dollar. All right, well, let me do this. Now, one thing that I have to do here, let me just quickly save this as fxstreet.com example. Okay, one small thing that I have to do here in my charting software is that I have to adjust the settings. Here we go. If you're going to the British pound, so what did we choose? We chose the GBP versus the USD, or USD versus GBP. GBP, here we go, versus USD. Can I type this morning? Okay, and I actually have to specify whether I'm using here the mini Forex or whether I'm using the regular Forex, and I'm using here a standard account where it's approximately, is it right? It's approximately $10 per pound per pip, somewhere around this. I think it makes sense. So you see, I have to adjust these settings because they change from time to time. So let me quickly do this here, and let me do it also for the Japanese yen. I think we did the Japanese yen versus the US dollar, or US dollar versus Japanese yen. And so you know that constantly the value of one pip here changes. So I'm just for the sake of the exercise here using $10 per pip, and you know how to adjust this. There are a bunch of websites out there where you get the exact pip value for all the markets out there. Okay, so let's do this. Let me go back here to my strategy toolbox, and this is what the last thing that we're going to do. We want to make sure that this works equally well on all these markets, euro versus the dollar, euro versus the British pound, British pound versus dollar. I'm sorry. Yeah, I think this is what we picked, right? So let me quickly do this. You're absolutely right. Thanks for noticing. So GBP versus the US dollar. Would have caught this in a minute, but this saves us some time. Thanks for catching this. And let's run this strategy on these related markets and see if we receive similar results. I know I get the warning here that we have to wrap up in 2 minutes. The program AT, and let me just write it down, is Genesis Financial Trade Navigator. And the website is genesisft.com. All right, I'm typing this in the chat. And so we are using here the last test to see how good our trading strategy that we have developed here really is. This was our reference. So the first test is showing our reference. The second test is running here. And administrator, I promise you I'll be done here in 2 minutes. Okay. In the meantime, what I will do while we are waiting here, I'll give you the contact information where you can contact us. So the website where you find more information and also a free trading strategy is www.rockwelltrading.com. Look for free trading strategies. You can contact me at support@rockwelltrading.com. And as the moderator said previously, there are a bunch of recordings and more information available here on fxstreet.com. And I'm a little bit stuck here on the second test, it seems. So we will see if we still get the results here within our allotted time slots, or if we have to exit it here and I have to leave this testing to you, which actually wouldn't be too bad, right? So that you get a feeling for what we have been doing here. We're still waiting for the results. Okay, are there any other questions that I could answer in the remaining minute that we have before the results are coming back here, hopefully? Otherwise, do the testing. Okay. Here we go. Okay, let me just quickly bring it up. The test results are coming in. And it is exactly, it happened what I predicted previously, since I still had the real-time streaming on. If we do the real-time streaming in these webinars, we're using a lot of bandwidth, which might just log up the charts here. So let me go back and bring this up. I'm sorry, guys, it's not coming back up, but I already see something which you don't see on the screen, where it says that we have an average win here that's very comparable, the same winning percentage here. So it seems that this is a very solid trading strategy that can be applied in multiple markets. And that's the ultimate test that we have been doing previously. Test a strategy on multiple markets. Again, for more information, shoot me an email, visit our website, or visit all the resources that you have here on fxtrade.com. This wraps up today's webinar. We'll be back with the next part of the series, Profitable Day Trading, the first Tuesday in October. Okay? So thank you very much. I'm switching the camera off here because it starts flickering. Okay, and Dion, I'm really sorry, Avod, but we're running out of time. We have to empty the room here for the next presentator. Guys, it was a pleasure talking to you this morning. Thank you, fx3.com, for having me here today.